What's up everybody, Tom here with another video bringing you all of the latest updates to do with the stock markets and markets around the world. In today's video, we'll be discussing the technical analysis levels for the S&P 500, Nasdaq, Tesla, Apple, Bitcoin and others. And we've had some big ramps in some of those markets. FOMC meeting minutes have been now released. And of course, we're seeing that tapering discussion that could commence mid-November or mid-December. Look, the reality is we knew the tapering was coming, but what next for the markets? Stay tuned to find out more. All right, guys, well, here begins our market recap for the markets closed 13th of October 2021, and we're only 2 days now away from the all-important third week of the month expiration date. And this is, of course, what a lot of people are looking at in terms of giving us some direction here with the options expiry. We're taking a look at that throughout today's video, along with our technical analysis key levels. But I just want to discuss here the market as we saw it in terms of sector rotation and movements. So Microsoft 1.17%, the FANG overall mostly positive except for Apple with those concerns that we mentioned yesterday in the supply chain. And financials actually showing uncharacteristic weakness here. So a mixed day in the markets and almost neutralized across the board. In terms of looking at sectors and everything was so flat that it's almost not worth looking at. So I want to really focus on the technicals themselves. And let's talk about the SPY to start with, the S&P 500. And when we take a look at this chart, what you'll notice is that it has a daily close that some people might call a pin bar, some people might call a bullish looking close, but in reality, it's more of a nothingness candle. It's not so much that we have seen bullish action so far because we haven't. We'll talk about that in a second, but when we go down and we look at the 2-hour chart, what you'll notice is that it keeps coming up to certain areas and then rejecting them. So in this case, it's that 43.75 zone. We've seen it come back to that before, have problems with it over here, and then as it went through, it gapped above, came back down, didn't even find that much support there, which is interesting, but then it has sold off a few times. So we've sold off once, twice, 3 times now from the 43.75. So potentially more keen bulls will be looking at this throughout the next session and saying, okay, 43.75, 43.80. If we get some bullish closures above here in the session, that could lead to some nice day trades towards the long side. That's certainly something that I think market makers and traders will be looking at. If we go over to the futures as well, we've got that 43.30 base that's happened through plenty of the futures markets. And if you actually take the distance here between the current channel of that 43.75 and the 43.30, and you extrapolate this should the market get underneath, what you'll notice is it slams straight back into the support. This is what we call a technical proof. This is where a market condition, such as a channel or a range-bound market that we're in here on the smaller timeframes, proves to a key level, whether it be the support or whether it be the resistance. So we are in what we call a neutralized market. We don't have a clear direction as of the FOMC minutes. We don't have a clear direction with the first bits of news out. Don't worry, there's more news coming at the end of the week. We've got retail sales PPI on Thursday as well, and hopefully we get some direction here. So there are some important points. Let's look here at the key resistance zones. So first key resistance zone is going to be around these moving averages on the daily, the 20 and the 50. Currently, the 20 and the 50 have been sell levels or bearish pressure levels. If we begin to go above 4,400, we've talked about how all of this, including that 43.75, is starting to look more bullish. And remember, the markets are optimistic overall. So we do need to keep that in mind ahead of earnings season. And I would like to ask in the comments down below, what's your thoughts on the earnings season? Do you think it's going to be a beat across the board with maybe down guidance in the future? So, downgrade on the guidance, but more of a beat, or do you think it's going to be something else? Let us know what your thoughts are. I'm interested to see what the community is in terms of expectations ahead of earnings season. 44.30, the key resistance to break out. Why? Because if this occurs, we have that lightning bolt formation. At this point, I don't think the bears are even present in the market again, and I think the bulls have firmly got control. I think we're starting to get a clearer picture of where the bulls fully take control, and that's because we'll be breaking the downtrend, creating the lightning bolt, really creating a very good structure and a good story. But from the bear side, as we saw in that channel, If we get underneath certain zones, we put pressure back on that 4,300, and the 4,300 area, if that breaks out, the weekly is the key there. You know, the weekly closes underneath, you better be paying some damn close attention, because next stop on the technical analysis train is going to be the 50 exponential moving average. Bullish pressure, bullish pressure, bullish pressure. You don't close underneath a zone like this without some significant bearishness. So when we're in a neutralized area like this, you've got to be nimble. You've got to make sure that you make faster decisions if you're day trading or scalping, because you don't really have a clear direction. And remember, corrections can be over like that. We've seen it plenty of times with big bullish buys. So if it gets underneath 4,300, big deal. If it gets above 4,430, that's a big deal as well. And anything in this range, it's all about being, speedy as you can be. Let's now take a look at the options, call walls, and put walls to get a better idea of where we think the market's going. Some things that haven't happened this week. Well, firstly, the call wall is still there. 450 is clearly a big issue here for the market. We don't expect it to be there by the end of the Friday session, 15th of October. But the put walls, are these too much for the markets? So many puts here, but no clear line. Generally, what will happen is through a week, you'll see kind of like one of these strikes get incredibly popular, and this will act as what we call a put wall or a put support. Basically, if the market comes down, the idea is it will bounce off this ahead of expiry, because Wall Street's not best interest is to pay these out. Now, you could argue, oh, but Tom, there could be a lot of Wall Street options there. Yes, but if we remember the statistic that 70% of options expire worthless, it's really important to bring that into our charts. And I'll show you an example from the expiration that actually happened on the 13th of October. So the market was expected to close at 436. And if we looked at the SPY before, it was very close to that. This is what we call maximum pain, or the area where we expect the most amount of profit to be made by Wall Street. And with these mid-cycle, mid kind of week options expirations, they're open to a lot of manipulation. If we move over here to the 15th, the maximum pain level becomes 440. So some people will say, well, that means that we should be going up into the end of the week. It doesn't always work that way. It doesn't always hit maximum pain. If it did, trading would be easy. Just look at this and always trade the maximum pain. What I prefer to do is find the outstanding mass level options and see whether there's technical indicators around those levels, lightning bolts, etc., double bottoms, resistance kind of double tops, all these types of things that if you see those happen at these key areas, it gives you that light bulb moment where you go, I see there's going to be profit taking here ahead of the Friday close. That's that extra element to what we call actionable data. And actionable data helps us as technical traders or fundamental traders make better informed decisions. So before we get back over to the Nasdaq and talk about that market, which is the stronger market through the last session, and maybe even a little bit of IWM, let's take a look at Tesla. So a lot of people would be expecting, oh, Tesla should have been 880 already by now. Look, calm down, guys. It's certainly at a level that is very bullish and it still looks pretty good. We get an indecision day here on Tesla. That's a long leg doji. However you look at it, you've got the low, you've got the high, it closed and opened at the same kind of point in terms of the gap. And it's not a bad market. It's not a good market. It's nothing in particular. It's relatively bullish, and that's the good thing. Is there a bearish sign here currently in Tesla? No. It doesn't just jump out of the gates every single time and go straight to the level. So I think that's the important factor to look at. People have expected now that markets move up 10% after a breakout occurs. It's not quite like that. Everyone knows of the $800 price breakout. I heard it all over social media in the last couple of days. And if everybody's talking about something, it might take a few days to get ready. But you can take some solace in the options. Firstly, not that many calls open. Not a bad thing when it comes to, where the strikes are at. But notice again, the put supports or the put walls, they're starting to creep up behind the stock. And this gives us more confidence that the stock is truly looking better, because of course, if there's heaps of people bearish on it in the past, when everyone's been bearish on Tesla, what's happened? It's tended to go up. The news gets better the next week as well, because coming into the 22nd of October, you have lots of put walls. You've got lots of put supports. However, for some reason, there's some strong buying on this 825, 830 strike. So look at this, huge buying might act as a little bit of resistance throughout the next week of session. So we'll be watching this one very closely. And could we be trapped between like an 800 and an 830 or something next week? It's very possible that that could happen as we grind higher, with the idea of obviously hopefully getting to that 880 by, end of October into November period, a very strong seasonal. And speaking of seasonals, let's look at Tesla from the seasonality standpoint. There's some interesting factors here, and this is derived from our private community. If you want to get access to it, free 7-day trial, you can jump over to fxevolution.com and get access to it from the free 7-day trial. Monday and Tuesdays, lots of retail buying. That's usually the strongest days for Tesla trades to the bull side. Actually, slight negatives Wednesday, Thursday, and Friday. And what you'll notice is that November into December, so often, clearly, the October earnings doesn't really meet the expectations of the market. Maybe this time is different, but November, December into January has amazing ramps on Tesla. So Tesla tends to come out of the gates very strong November into December into Jan, and it also has strong Junes. And if you look through the charts, you'll notice this is the statistical fact. I mean, what do you do with it? You look for great technical analysis breakouts, and then you bring that in with your data. However, it's just one of those things that you bring together with it. You don't want to just trade, November, every November's great and Tesla I'm going to buy. That's not really the reality of the world. It's more about bringing it together with your other actionable information. Let's go and have a look at Apple. So Apple did open, it sold off early, and it was kind of driving that market down a little bit as much as it could. It ended up pretty much regaining most of what it did lose through the session, 140.91. Not really a bullish or bearish close for it. Some people say, it looks like a rejection style candle. Yes, there was buying here at the lows, but it's not enough to go off right now. I mean, we know that this 142 is a bit of a problem for Apple both ways, support and a little bit of resistance. We also know we want to, just like the rest of the market, get our trough, get our peak, get our higher trough, and get our higher peak. And we get the sequence, things start to look a lot better. So have we started running out of time here for the market to go bearish? We're going into earnings season. Earnings tend to be optimistic overall. And in 15 days, we're going to see Apple have its announcement. Will it go up into its announcement? Well, from the options this week, we obviously would prefer to expire underneath that 140, which seems kind of likely. That 144 here, 145 are where the big calls are. These guys don't seem to be making any money as per expectations. 70% of options expire worthless. You can totally see why the market hasn't pushed Apple up over this period. But what becomes more interesting is some of the seasonals. So October, July, and August tend to be very strong months for Apple. And July was no exception. A very, very strong month for Apple and good trading going into that. Now we've got that October run up. Now, why is this tend to be very good, you might ask yourself, over 20 years? Well, the reason why is because, of course, of the new iPhone. You get that guidance being upgraded. Generally, they say, we've sold more phones than ever before and everything's looking great. And that's part of the reason why that fundamentals comes along with the seasonal. So from an Apple perspective, we're stuck in a zone. We're still neutralized to a degree, and we're looking for the market or the indices to show us more of a direction. Let's take a look at the US 10-year. A lot of people looking at this one at the moment. After the FOMC meeting minutes, it dropped a little bit. It's kind of just hovering around a zone where you'd hope buyers come back in. And many people are now starting to write those articles that they expect inflation to go to 2% and everything. It's funny how all the articles come out when it already breaks and then it pulls back and then everyone gets scared of it. And I'm hoping this is where it turns and the US 10-year starts to make its resounding kind of gain again, because this is the zone where if you don't turn here, it's like the point of last call. What happens after this? Well, we break all the technicals and we start to say, okay, well, this previous resistance in terms of body closures isn't even acting as support. Previous resistance, previous support, previous support. It's a big deal, this level. And if it doesn't hold, well, are we really going to go to the 1.7, the 1.95? Maybe not just yet. And that's something that I think the QQQ will benefit from should it continue to come down. Speaking of the Nasdaq and the QQQ, let's take a look at this chart. Again, another one of indecision for the day. Slightly bullish little close here. Stuck in the middle of our what we call chop city kind of range. There's nothing going on here for the longer term swing trader. It's very, very tough kind of trading through that session unless you're scalping or looking at the ranges. And it's been another scenario where if you've been fast, you've been quick in the indices, and you're looking at the smaller timeframes, you've done well, I'm sure, because you have no bullish or bearish direction. But in this one, still, we've got the negativity coming off 15,000. We've got another sell-off candle. We haven't snapped that back. And if you're a bull in this market, what you're celebrating is this breakout. If it breaks past 15 again and closes, boy, oh boy, I think you're celebrating. Because at that point, we create the lightning bolt up, and we've broken the downtrend, and we're in earnings, we're in optimism, and things are looking great. Do I blame people for buying this level? Absolutely not. I mean, you can see here on the trend line that this has been a very good level since the pandemic has begun. We've got great buy areas, and a lot of people have been looking at this one, and we've been following it for some time. And this was definitely our first case scenario with the pullback. We also expected around an 8 to 10% pullback on the Nasdaq. So we got 8%. We were hoping for obviously this 10, but you're talking about only a few percentage points. And this is one of the important factors that you want to bring into your market analysis. How much is that extra percentage worth to you? Do you want to start scaling in? Scaling is a concept that people discuss all the time in the markets, and it's certainly a very powerful technique. So scaling is probably one of the stories that some people will use when they're talking about finding marginal entries, when they're talking about finding breakouts, and I think it's important. QQQ, along the same thing. We saw a little bit of bullish close here, but overall still very stuck in the range. And when we take a look at the futures, and let me just bring this down to a 5-minute chart for you, and you can see it. We've got this 14,800 acting as a little bit of resistance. So every time we've come up to the 14.8, we've sold off so far. Should we breach this level, similar to the S&P 500, we're starting to see that bullish intention for the next session, and certainly a very important level to be watching. 14.8 here on the NAS, and to the sell side, 14.6. If it gets underneath there, you'll notice big buying off that level now, 1, 2, 3, 4, 5 times. And this is why we're saying if you're on the smaller time frames and you've been nimble and you recognize these key levels, and you certainly should have been able to buy over here, you've got some very clean zones for those day trades, for those scalps. Before we talk about the news upcoming, let's just quickly discuss here Bitcoin. It continues to try ramping up to that 60,000 level. Every time it sells off, guys, it just keeps finding buyers. You know, it's sold off now to the 50 exponential moving average. It's picked that up, that beautiful support there through the 54. Bam, picked up again after doubling, created basically a double bottom here on the smaller time frames. And if you actually take the distance of a double bottom and you work that out and you take that to there and you bring that through, it pretty much brings you into that 59,500 to 60,000 area. So strength looking like it's coming through for Bitcoin here. And that's pushed into some of the other coins. We've seen Polkadot go incredibly strongly in the last 24 hours. If we bring up DOT, let's have a look at DOT versus Tether. You'll notice it traded up to 42. Historically, this is very big breakout for it. Everyone's getting pretty hyped on this coin at the moment. Look, it's obviously speculative like any of these things. 48 and 44 are both resistances that will be of interest in the future. And it's certainly one to watch. But I want to leave everyone today with just a bit of a discussion about IWM, or the Russell 2000. We saw strength in the last 24 hours and the last couple of days coming into hyperstocks. So what this means is smaller companies and smaller stocks are starting to show the signs of technical, consolidation or technical strength after a very bad sell-off, and many of them. Is this important to look at? Yes, because the Russell 2000, especially to the bull side, can often precursor the rest of the market. And a few people in the comment section correctly said this. The small caps often lead, and then we see those larger caps come through. And I think this is the easiest scenario to look at. This has been a horrible sector to be in this year. So from the 18th of Feb, we've only gone sideways. So basically almost an entire year, we may be going sideways through this market. Now, what happened is the ramp from October into the end of the year, into the start of 2021 was massive. Percentages were huge. Since then, if you go look at the S&P 500 or the QQQ, the Nasdaq, both have done much better. So what happens is often the small caps will lead, and then the larger caps will come after, especially in the bull side. So you can check this out. You can watch it. And I think this is an important one to have on your charts in the future. Let's move over to the news. So we've got PPI coming out at 8:30 a.m. New York time on Thursday. And then we've got core retail sales and retail sales at 8:30 a.m. Friday, October 15th. Both will be important numbers. Both might get us out of Chop City. Let's hope we actually get some strong direction. But if you've been a day trader, you've been a scalper in the markets, and especially the indices, I don't think you can really complain. It's been a pretty good market for the last couple of weeks. Sideways action isn't necessarily bad for every trader or investor out there. Stay tuned, guys. If you've enjoyed the video, please remember to subscribe, smash that like button. It does help us out, and we'll see you in the next live stream or the next video. Thanks so much. Bye for now.